What are the key features of the National Banking Act? Have you ever wondered how the financial system in the United States transformed during the American Civil War? The National Banking Act of 1863 played a vital role in that shift. Let's break down the key features of this important legislation. First, the act allowed groups of 5 or more individuals to create federally chartered national banking associations. This was a significant change from the previous state banking system, which was often unreliable and fragmented. With federal oversight, these banks were held to a higher standard. Next, national banks were required to purchase United States government bonds and deposit them with the Treasury. This requirement allowed them to issue national banknotes up to 90% of the value of those bonds. This connection between currency and federal debt helped finance the war and provided a stable currency backed by the government. To encourage state banks to switch to national charters, the act imposed a 2% tax on state banknotes. This tax aimed to phase out the confusing and often unreliable state-issued currency. It was a move to streamline the banking system and make it more uniform. The act also established the office of the Comptroller of the Currency in 1864. This federal office was created to oversee national banks, ensuring they complied with the new regulations. This centralized supervision was essential for maintaining order in the banking system. Another important feature was the capital requirements for national banks. These banks had to meet minimum capital requirements based on their location's population. At least half of the capital had to be paid in before they could start operations. This ensured that banks were financially sound before they began serving customers. The National Banking Act also supported the financing of the Civil War. By requiring banks to hold government bonds, it created a market for war bonds. This was crucial for funding the Union's military expenses during the conflict. Finally, the act replaced the chaotic system of state banknotes with a national currency that was safer and more uniform. This change reduced regional financial confusion and instability, making transactions easier for everyone. In summary, the National Banking Act of 1863 was a key economic measure during the Civil War. It strengthened the federal government's financial position and laid the groundwork for the modern banking system in the United States. By moving from a decentralized banking system to a federally regulated one, it helped stabilize the economy during a time of crisis.